Okay, let's try and unpack this. Alphabet, the company behind Google. We all know the name, right?
We definitely do.
But what's really going on beneath the surface, it's this huge, colossal company.
Absolutely.
So today, we're taking a deep dive. We've got financial reports, legal docs, all sorts of sources
A good mix.
to understand its incredible growth, its big strategic bets, and, well, all the controversies swirling around its present and future.
There's certainly a lot there.
Our mission here is really to arm you with the key nuggets, the most important bits of knowledge about Alphabet. So you're informed, ready for those aha moments.
Make sense of the noise.
Exactly. So let's maybe start at the beginning, go back a bit.
Sounds good.
Alphabet's story, it really kicks off in 1998. Larry Page, Sergey Brin, the classic Stanford garage setup.
Right, the backrub algorithm. That was the seed.
That laid the groundwork for Google search as we know it.
It's that classic Silicon Valley garage story, isn't it? But few could have guessed this scale, this diversification.
For sure.
And a really pivotal moment was, October 2015? The formation of Alphabet Inc.
Yeah, the big restructuring.
Exactly. It wasn't just a name change. It was strategic. Creating this public holding company, it fundamentally rejigged the whole business.
Get more transparency, right?
Yeah, financial transparency mainly. Separating Google's profitable core search ads from the more speculative stuff, the other bets.
And the founders, Page and Brin, they're still central.
Well, what's remarkable is even though they step down from day-to-day roles, they still have immense influence. They control, I think it's 56% of the voting power.
56%, wow.
Yeah, through those dual-class shares. They take a symbolic, $1 salary. But their vision still kind of steers the ship,
Got it. Okay, let's talk numbers because financially, this story is pretty wild.
It really is.
Consolidated revenues, they went from $66 billion in 2014 to $350 billion in 2024.
Astonishing jump.
And net income from $14.4 billion to over $100 billion in that same period. For a company that big, that's something else.
It absolutely is. And if you connect that to the bigger picture, their financial strength is just exceptional. Very low debt. That debt to equity is tiny, like 0.07.
Practically none.
And massive cash reserves. What was it, $95 billion most recently?
Huge safety net.
Exactly. But what's also really crucial now is the shift with Google Cloud. It's actually profitable.
Right, that's relatively new, isn't it?
Yeah, after years of losses, Q4 2024 saw over $2 billion in operating income from cloud. That's not just a number. It fundamentally shifts their risk profile.
Diversifies away from just ads.
Precisely. Shows they can execute on these big long-term bets. Now, the other bets, things like Waymo, they do still lose money.
How much are we talking?
About $1.17 billion loss in Q4 2024. But you have to see them as critical moonshot investments for future growth, diversification, aiming for the next big thing.
So even with those losses, they're seen as essential moonshots. How does a company this big strategically balance that? Pouring money into long-term bets versus needing profit now?
Well, it's that classic innovator's dilemma, right? They basically use the immense cash flow from Google's core ads and search to fund these potentially game-changing but speculative ventures.
And the Alphabet structure helps manage that.
Yeah, it lets them isolate the financial performance of these riskier projects, gives investors a clearer view while still nurturing potential future giants. It's managing the present, sure, but aggressively building for what's next.
Okay, but it's not all smooth sailing. For all that financial power, they face some serious headwinds. What about the regulators?
Yes, that's a big one.
We've seen some major antitrust challenges. The EU fined them, what was it, over $4 billion for Android dominance?
A staggering $4.125 billion, yeah. And that's a clear signal,
Yeah.
Global regulators are really pushing back against tech monopolies now.
And it's not just Europe.
Oh, no. In the U.S., the DOJ has rulings against them for monopolizing digital ads search defaults. That includes the reported $20 billion a year deal just with Apple to be the default search.
$20 billion a year just for that.
Reportedly, yes. So this raises a key question. These aren't just fines you pay and move on. They're systemic challenges. Meaning a significant financial burden, yes, but also forcing real changes in how they operate, their governance. And then there's privacy.
Right, the incognito mode settlement.
Yeah, the $1.4 billion Texas settlement in 2025 for deceptive practices there. These things are pushing them to fundamentally rethink data collection, data use. It's forcing a rebuild of their compliance internally.
Okay, shifting gears slightly, AI. It feels like AI is absolutely central to where Alphabet's heading.
Completely. It's everywhere. Search, cloud, even things like fleet management.
But there's some tension there, right, in the market?
Yeah, delving into this, you see investors getting a bit nervous. How exactly do they monetize AI in search without eating into their incredibly profitable ad business?
Cannibalizing themselves.
Exactly. We actually saw the stock drop, what, over 7%?
Yeah.
Just when they announced their new AI mode. Shows that initial market skepticism.
So putting it all together, the financials, the moonshots, the regulatory heat, this big AI pivot. If someone's looking at the stock, what's the value proposition? Is it a buy?
Well, if you look at it through, say, a Benjamin Graham lens, classic value investing.
Right.
Focus on intrinsic worth, margin of safety.
Right.
Alphabet's financial strength, low debt, tons of cash flow. Definitely
Excellent.
provides a margin of safety, no question.
Wow.
But its PE ratio, around 20. That's not really deep value territory.
So not a bargain bin stock.
No. The real value, the argument for it, lies in its massive economic moat.
Meaning its competitive advantages.
Yeah, its search dominance is unparalleled. The network effects across everything they do are incredibly powerful, and they just keep innovating relentlessly, especially in AI.
So the conclusion is,
I'd say the stock is trading closer to fair value. It's less a deep value play, more a bet on continued innovation, and, crucially, their ability to navigate these really significant headwinds, regulatory market shifts.
Fair value. Interesting. So wrapping up, what really stands out to you about Alphabet today? Is it just the sheer financial power?
That's a part of it for sure.
Or is it those audacious other bets that could define the next decade? Or maybe it's just the constant drumbeat of these legal battles they face everywhere.
It's the combination, isn't it? The scale and the struggle.
Yeah. It makes you think, consider how even a company with such entrenched dominance, they still face immense pressure. Pressure to innovate, pressure to comply, pressure to keep proving their long-term vision.
Always proving something.
It's a complex story, constantly evolving, a true titan, still shaping our digital world, but definitely facing some challenges.